The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at that midweek trade action, a tough day Wednesday in the soy complex. Corn and wheat doing their best to kind of hang around unchanged at a fairly quiet day overall. Some pressure in outside markets and mixed action in the livestock trade. Let's take a big picture look at things. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again as we are on the road to the Farm Machinery Show. And I pull up the quote screen, and kind of a tough day in that soy complex after what was, I'd say, a ho-hum February WASDE report on Tuesday, Brian.
Yeah, you had kind of a report that might have disappointed some, maybe looking for some further reduction, in particular, maybe out of Argentina with the drier weather, but reduced 1 million metric tons from a month ago. But really, the number was neutral, or in fact, a little bit negative compared to pre-report expectations. So beans have been kind of softer here, and it's been the products as well. Seems to be plenty of inventory potential for meal out of Argentina as harvest picks up. So on the defensive, that despite a good flash sale, I call it a flash sale, 120,000 tons to unknown destinations announced this morning for soybeans. So that's a good number, but it sure didn't. The market just shrugged it off. Ironically, you've got the corn market in a good spot today, gaining back most of yesterday's losses. And again, testing a 21-day moving average and finding buying interest. And didn't take long for prices to turn to the positive this morning. And so far, they're holding there about a nickel higher in the front months.
Someone made the comment to me that you got to feed a bull every day to try and keep the momentum here. And, it felt like that the USDA numbers on Tuesday were neutral to friendly corn. But overall, though, it just feels like we haven't got enough bullish news to really sustain a continued rally here in some of these grain markets. What do you think, Brian?
Well, if the market's buying fundamental news, that is new news or anything that, as you say, you feed the bull with, there really isn't much. Uh, I don't want to be negative Nelly here, but when I hear about rain delays in Brazil, I understand there's a fairly tight window to get that second crop corn in. But we also have seen where they're able to make a real fast and hefty progress. So I'm a little leery. That being said, it's kind of amazing how long the managed money is in the corn market, and you're talking closing in on 370,000 long on last week's Commitment of Traders report. And that's just an amazing turnaround from earlier in the summer, short about 350,000. So the market's rallied about $1. So you'd think you'd get more rally out of that. The problem with and we've said this before, there's been so much farmer selling because time's getting by. They need cash flow. The market's up. It's better than where it was. And the prices last spring into the summer were not good. And consequently, farmers had a lot of unpriced inventory. So far, the market's absorbed it, but I share that same concern. Is there something here to feed the bull? And I'm kind of stretching it if I say there isn't South American weather at these prices.
Well, South American weather feels like it's going to be the key thing to watch here until we get to the February outlook numbers. And then we're going to start really honing in on acreage in the U.S. here as we get into March. I wonder about when you look at the new crop ratio, core to beans, it feels like there's some opportunity here for farmers to at least get started. That would seem to be pertinent risk management right now. What do you think about that, Brian?
So we talked all all fall, in the winter. That typically your prices peak in kind of that March, April, May window, spring window, late winter. I think that's been moved up a little bit with South America becoming such a big player, and then we get a better view or look about what that southern hemisphere crop looks like realistically about now, about mid March and onward. So a long way to go on that safrinha corn. It's just getting planted. That's the big exportable corn. But you've got December corn inching up to the almost the mid 470s, and that is a target point we talked about long ago. That if we could see the market get into that level, maybe that's where you start making your first sales or buying your puts. That is something I certainly want to recommend because in talking to seed dealers, I am still of the mindset that corn acres will be up maybe 2 to 3 million. That means a likely rise in carryout.
Wonder about the wheat markets here as well. Kind of a back and forth type of trade day there. I know there was some concern about Black Sea supplies again. I kind of heard that rumor in the trade the last several days, but wheat market, kind of the same thing. We had a few adjustments on Tuesday's WASD, both U.S. and global balance sheets, but nothing really to write home about in the wheat trade, Brian.
No, there wasn't anything there that I would write home about. In fact, it seemed like it almost seemed like the USDA sort of took a mindset. Let's just pass this buck down the road for another month, and in the meantime, we'll see where tariffs are. There just wasn't the pre-report estimates numbers were small, corn, beans, and wheat in their ranges, and the final numbers were barely unchanged or within a margin of error to the expectations. So the report's behind us. It didn't really educate us on much of anything. The wheat market, though, I think the focus still has to go. You say to the Black Sea region, I'll say to Russia and the Black Sea region. There will be exports out of that part of the world, and they'll undercut U.S. prices, but there's a limited supply in the horizon for Russia, and I think that's going to continue to bear fruit. That expectations with about 35 to 40% of their crop is rated into a poor category.
Let's talk livestock. Cattle futures kind of mixed on Wednesday after a tough day Tuesday. Cash cattle trade. I know we saw a little bit out there Tuesday, and we're starting to get some bids, a couple dollars lower in both the north and the south here. I'll just kind of I'll frame it up this way. I know people are getting maybe nervous in the cattle market here, and we've been talking about this for the last couple of weeks. What's your take on what's going on with cattle right now? Are you seeing some red flags on the charts? What's your feeling right now, Brian?
Not so many red flags in the charts other than what we call a V top, where the market goes almost straight up and then straight down, and you end up with a V shape or an inverted V. And so that's what I see in the charts. So the cash really did punch the market higher and lead the rally. And then you have a lot of trading and traders. And I think sometimes those algorithm trades, they keep buying. So we had that real strong punch. Now it's going the other way. Come back down. Cash prices are starting to show some signs of weakness, some economic concerns out there, inflationary concerns. And again, it brings us back down to reality that these are really, really high cattle prices regardless. I don't think we're in a position here to see the market just take a tumble. I think nervousness is good. You should be nervous. These are high prices, and looking at put options and things like that to defend. But I think the market may have come down enough. If you look at where April is, we're around that 196. That's a good $4 to $8 discount to what we expect cash to be. That seems about right at this point. So it's tough to get any more negative beyond this, at least for the moment, until we have more cash development.
How about over in that dairy trade? What are you watching there as we work to the middle of the month of February?
Well, the thing we watch probably most, of course, is maybe cheese prices, and are they leading the way? In a very small gain today, about a penny in the blocks and barrels. We continue to look at butter as, is that doing something? And really, it's had a nice little bounce here maybe 2 days ago, off a little bit today, but still right toward the bottom of the barrel or the bottom of the trend. So you're not getting help from butter. The other product that we keep an eye on is whey. That has been on a slide now for nearly 3 weeks. Just challenging to get too optimistic on the dairy numbers. Now, where you may continue to see some optimism is as this idea that we're just not going to build a herd very quickly. There's a lot of money in beef calves, that type of stuff. But it looks to me like the dairy market's got a tough road to rally from here without, if we can't get the product markets moving in a more directional bias, as in higher, I think the dairy market's got some trouble ahead of it here, and it's showing that today, down 13. There's a lot of volatility, but now we're getting more toward the lower end of the recent range.
Brian, as we wrap it up here today, appreciate the time. As always, final thoughts you have for folks listening in?
Well, just keep an eye on these new crop corn prices as they get closer to 475 as starting points. I think that's going to be my highlight for the week there. That market's had a really good run. It's got really strong fund buying, which means it's very, very susceptible to a liquidation phase. and things could disappear kind of quick. So I would err on the side of doing things either in the cash market on new crop. If you don't like the basis, consider hedge derived. If you don't like that, sell futures where you have lots of flexibility. If you don't like that, then look at puts or fences where you buy a put, sell a call. I might even be so bold to say buy a put, sell a couple of calls, pay for the put. So there's a lot of things out there to look at in that December corn, new crop corn prices.
Brian, if folks want to reach out to you at Total Farm Marketing, I know a few ways to get in touch. How can they reach you?
My ask is to call 800-334-9779 or shoot an email to me, Brian, that's spelled Bryan, so Brian with a Y, at symbol totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Always good to check in with you. Thanks for joining us. Have a good one. We'll talk to you next week.
You too. Thank you, sir.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.